Please pay for this video by clicking subscribe and like, and turn on notifications with the bell to be informed of new videos. I remember a woman who took out a loan to buy a house. Her home loan broker, who I'm sure was looking for that commission, talked her into refinancing her federal student loans into the mortgage for her house. They essentially became a home loan at that point. That means no COVID relief, no flexible payment plans as low as $0 per month, no forgiveness, no deferments, and no forbearance. On top of all that, if she can't pay her loan, they can come after her home. In almost every situation, you should not refinance federal student loans with a private refinance loan. If you aren't going to watch more of this video, then that's my short bit of information for you. You probably don't have one of those super rare situations where it would be a good idea. I could have started this video with a more passive approach.
Should you refinance your student loans with a private refinance loan? Let's discuss if that's right for you.
The problem is there are lots of people doing that, and either they don't know much about student loans and they want to protect their reputation as a financial guru and indirectly their income stream by making up an answer, or it's more direct and they have an affiliate link.
It's an important choice, but if you do decide to explore further, please click my affiliate link.
Educate yourself, and if you decide to seek out advice from a financial professional, seek out unbiased and informed financial advice. Make sure the professional you speak with understands student loans. Many professionals don't fully understand how they work or their advantages. Educate yourself so those conversations will go smoothly, and you'll be able to judge how knowledgeable that professional is. And of course, be aware of any incentives that professional might have to steer you towards particular loan products. First, if you are having problems making payments on your student loans, contact your student loan servicer and sort out your payment plan, which in some cases can be $0 per month, or arrange a deferment or a forbearance, and you might even qualify for a forgiveness program. The government is paying the loan servicer to help you. If things are bad, the number one rule is don't make it worse. In most cases, people don't default on these loans because they have no money or can't make the payment. They default because they don't communicate with their servicer. Calling the loan servicer can be very stressful and anxiety-producing for many people. I understand. I know that emotionally crippling reactions to money are real and powerful. I'll be making another video on financial anxiety and panic. Subscribe to my channel and turn on notifications to alert you when that video is released. Now, I want to point out that this video is about U.S. federal student loans owned by the U.S. government. Together, they are referred to as federal student loans. U.S. federal student loans are not like other loans. Compared to other loans, U.S. federal student loans are really good. They have a lot of advantages that make them better than most other loans, even loans with lower interest rates. Private loan companies dangle the low interest rate to entice you into refinancing with them. It's important to remember that interest is only one part of the loan equation. You should also consider risk and benefits, and giving up the benefits of a federal student loan to get that lower interest rate increases your risk and decreases your benefits. That little bit of interest savings is not worth it in almost every situation. To be fair, there are probably some really obscure situation where refinancing with a private loan would be a good idea, but if it does exist, it would have to be a really unique situation. You might think an advantage to converting a U.S. federal student loan to a private refinance loan is that if things get bad later, the private refinance loan will be easier to discharge in bankruptcy. But no. According to Colorado attorney Matt Berkus, loans that are refinanced into a private loan are still considered to be student loans in bankruptcy court. The link to his YouTube video is in the comments. In almost every situation, it's best to keep federal student loans as federal student loans. You probably know that President Biden's student loan debt relief plan that was intended to pay off up to $20,000 of your student loans was knocked down by the Supreme Court in July of 2023. But completely separate from that relief plan, there are some existing forgiveness plans that can forgive your entire balance. The forgiveness plans, including the ones for public service, are based on the number of scheduled payments. Even payments scheduled at $0 per month count, and the time during the COVID pause counts. You would lose access to these forgiveness plans and any future forgiveness plans if you refinance. A quick note. Technically, there is a difference between refinancing and consolidation. A federal consolidation loan is not a refinance and has all the advantage of other federal student loans. Bottom line, there are very few situations where refinancing student loans is the better option. Contact your loan servicer if you need relief. Also, I put some links that might be helpful to you or even pay you money in the comments. Thank you.